The question there is, should the Fed pause in tapering? What do you think? Is this an alarm bell that deserves that?
In a sense, Tyler, I would say that no matter what happens going forward, inflation's going to fall next year, irrespective of Fed policy. I think that's maybe the message we've been seeing in the markets of late. Commodity prices have come down. Yields continue to fall, even as the Fed has already started tapering. I'm less concerned about the tapering than the tightening. And I would argue that, like any good physician, the Fed first should do no harm. And I think given the vast uncertainties that we have out there, raising rates in this environment would probably just compound some of the problems that the market's facing right now.
Do you think that the Fed has gone from tilting towards being very accommodating to now feeling pressured or some urgency to lean the other way and combat inflation too fast, too soon?
Well, I think they're talking that way, and the job owning itself, Tyler, might work. I mean, as I said, you've got the 10-year note yield now at 135, even as the Fed has cut back on its purchases of bonds. I also think that there's probably some confusion both around the employment report, which was probably far stronger than some had anticipated, and this Omicron virus variant, which could cut either way. It could slow growth or it could increase supply shortages and push up goods prices. In either case, we've seen inflation break-evens drop really sharply in the last few days. We've seen commodities come down, and we've seen bottlenecks start to ease. So the Fed is talking more hawkishly. And look, they can taper. That's fine. I don't think it really matters all that much. I do think they ought to back off on the rate hike hints, because I think it's confusing the markets and clearly not in keeping with what we're seeing in certain market behaviors.
Ron, though, it may not be true that all inflation is going to disappear or decline. We just saw today that wage inflation obviously is going up, which perhaps many would argue is needed after many years of being fairly stagnant. So when you're talking about inflation declining, you have to be more specific about that, do you not?
Yeah, and look, I don't think wage inflation is inflation, particularly if next year we see the bottlenecks ease and we see goods prices come down. There have been some analyses that have shown that almost all the inflation we've seen this year has been in the goods producing sector. So as that backs off and wages rise, you actually have an environment where you have to figure in productivity, which is probably going up. That's not inflationary. And the other thing, Courtney, too, I think with respect to that, is we're seeing the use of automation now being adopted at record levels. That in and of itself is disinflationary and could offset the impact of rising wages. So I think the Fed needs a totality or a total picture of what inflation looks like 1 or 2 years down the road, not just this year. I think, they may have backed away from transitory. I don't know why anybody thought transitory was 3 months. In my mind, it was going to be a year or so. And I think we have to get through the pandemic before we really know that inflation's explicitly a problem.
So do you think, I guess implicit in what you're saying, or maybe explicit in what you're saying, is that most of the inflation that the economy has experienced this year is pandemic related, it is supply chain and scarcity related, and that is going to work itself out and come down, right?
Yep, 100%.
All right. Ron, thanks very much. We appreciate it. You too. Ron Insana, our veteran, our senior contributor. Thanks a lot.